Hello, everybody, and welcome to the London Session Market Color with the Value Flow Trading team, and of course, led by us, Olufukeji, Ejimi, Adegbeye. Welcome to today's Market Color. How are we doing this morning? Ibukun Salako, John, Stanley, User. Good morning to you all. This is Demola Global here, and today we'll be looking at analysis on the US equity market. I mean, the US 100, US 30, NAS 100, and also, S&P 500, looking at what those markets are doing. Like you already know, Tuesday are meant for the US equities and also commodity, asset class. All right, quickly this morning we'll be focusing majorly on the US equity market. Many interesting things have happened between last week and this week. So really interesting that the market has reacted, right? Has reacted to it, and we can see that we are beginning to finally correct. Then put it on the daily time frame, right? This has been interesting, guys. This has been really, really interesting. Remember our analysis last week, right? Remember what we said last week that we're looking out for, all the things we said we're watching out for last week. Basically the reaction between the US and also China, right? Trade war and all of those issues that were popping up last week. In the middle of the week, they had a meeting, and then between two negotiators from the United States and also Chinese negotiators, and then they were able to come to a compromise. Guys, we've anticipated this for a long period now, but finally we saw that compromise, and then what happened? The market rallied to the upside. One of the signs we know that, okay, this thing is beginning to die down a little bit was from the VIX indicator, right? As of last week, VIX was still trading, say 24, 25-ish, not really 23, 24-ish, right? Currently, as we speak, VIX is trading under 18.67, percent, which is very, very significant. This means that risk is back on in the market. Investors are truly optimistic about the market, right? There's no more panic again. They are now, beginning to see a clear-cut pathway for them, and they are beginning to move their money. You can realize that gold has been tanking. The tank of gold, that's XAUUSD, is not surprising at all. We've mentioned this since last week, right? That if this thing pulls through, we'll see gold tank to the downside, and that's what we're seeing, right? Like a double top here. If this double top forms and then we see a break below here, we should see proper tank to the downside. But then we're not talking about gold today. We are focused on US 30. This is just to show you that all the markets are intercorrelated, right? Whatever it is that is happening on, value is just flowing from one asset class into another asset class. And for the past 2 months now, value in a way, we've seen the value flow out of US equity into safe haven asset like gold, yen, and now it's flowing back into the US equity market, right? So that being said, let's look at structure. What is structure doing this morning? What is structure doing this morning? We had some markup levels last week that I mentioned that most likely we're going to see price reacting from there a little bit, and we are confident we buy. In fact, our analysis since last week has been buy. We want to buy, right? Because everything was pointing green light for a buy, and which makes sense for us to buy, right? So on the daily time frame, we are still very much, this is a deciding place, right? For us to now see a proper change of structure. Look at it, we are still very much bearish on the higher time frame, right? You can't deny that. Let's do structure 101. Okay, come in. Okay. Let's do structure 101 again. You can see this. This was the last low that gave us that bullish move to the upside. If it hasn't been broken, then we can't consider this a structure. But however, look at this. Okay, broke structure, retest, and then there's a clear sweep of structure, right? However, look at something. Instead of creating lower lows, we've not seen lower lows. Instead, we've been seeing what? Higher highs and higher lows, right? Higher highs and higher lows. So what are we waiting for? A retest and then a break of these two, right? A break of this zone. A break of this zone will indicate that, okay, guys, we are fully now very much bullish to the upside, right? So we've seen a lot, semblance of this on lower time frame, 4 hours and also 1 hour. Market has been creating structure to the upside, but to give us a clear cut, push to the upside, a clear cut, direction on structure. Structure, this is market structure. Sentiment, we are bullish. Fundamental, we are bullish. We are now waiting for structure. Structure is just a timing tool for where to enter and when to exit, right? So structure, we are still very much on a higher time frame. That's the daily time frame. Once you see a clear of this zone, then you can now say, okay, strongly, we are very bullish. Let's now increase that lot size, right? So on the 4 hour time frame, look at what is happening. Look at what is happening. Okay. Last week, we marked some levels out, but then price didn't get there. I'm trying to figure out which of those levels we marked out last week. No, I think it's around this zone. It's around this zone, right? We marked out this level around this zone. But let me start with US 30, and then we'll look at it. We stated clearly last week, guys. We stated clearly last week that this was looking like a perfect sell box strategy, right? A perfect sell box strategy. And as at then, price was somewhere here, and we're saying, okay, we're going to either start buying from this zone. That's I still remember clearly. We said we start buying from this zone below this inducement to get to this level and then close about 80%, allow 20 to run. Because of course we know we're going to see some rejection of this market before we don't see price continue the bullish move to the upside. However, we didn't see that, right? We didn't see that. In fact, price struggled to, last Friday was kind of a ranging market, nothing really significant, just stalling both upside and downside, right? So we didn't see that move to this place for even us to, take part in the buy position. And what happened on, Sunday morning, Sunday night? Yeah, that's markets open. We saw that gap, this gap here, saw this gap in the market, and then, price started pushing up. By Monday morning, the news came out, 8 o'clock. Chinese reduced their 1-something% tariff to 10% for US. US also had to reduce their own from whatever amount it was to about 20, 25-ish or 22%-ish, right? So that's a good compromise across board. It's good for global economy. At least everything now is going smoothly, right? You can see the good rally on US equities market, and then the sell-off on gold, right? Because investors also, hedge fund managers, are looking at that to say, okay, should we import now? Should we not import? Manufacturers are saying, should we buy from Chinese? What are the tax implication of buying from China and all of that? So, but we have all of those settled now. All right. So, what are we looking at? We still have this zone here, right? We still have this zone here. I'm sure this buys sell setup, I want to believe strongly, is no longer valid. However, there are two things I'm watching out for. This inefficiency, it's always known that price will come to fill inefficiency in the market. So for me, I'm looking at price coming to at least give me, I want to see, I'm looking for a particular 2 box, okay? At least this, let me use this now. At least 50%, right? At least 50% of this inefficiency. I want to see price trade off into this 50% of this inefficiency for me to start buying. That is my first area of interest. Let me mark it out. My first area of interest, right? The second area of interest is where this fair value gap. Although price has tested the fair value gap, price already, in a way, you have one test of the fair value gap, 50% of this fair value gap, right? Which is this. 50% of this fair value gap. Those are the two places I'm watching out for price. The reason I'm looking out for this, assuming we had no inefficiency, there have been a clear cut, buy from this zone. Once price is 50%, we are buying off to continue the movement. But now we have that inefficiency across board, right? On US 30, on NAS 100, and also the S&P 500. So we want to be very, very careful so that we don't enter very, early. And then we get caught in the middle, right? So I want to wait for this to happen. 50% of this inefficiency, I'm going to pull the trigger, and also 50%. For this, I'll be more careful. That means I'm looking for lower time frame entry and lower time frame confirmation. That will give me more, confidence to take the market. And that possibility again in this can be, this is years 30. Everything is now pointing bullish. It might no longer even respect all of these things I've marked out, right? But then this is another possibility in the market. We most likely can see again. Price will just, by the time New York opens, break above here, then just come back, break above all of this, retest here, without even bothering going to this zone to retest or this down zone, and then continues. That is also a possibility, because now everything is pointing buy, right? US and China, they're beginning to settle their issue. VIX is all-time low. Look at it here. VIX, this, for those that don't understand, VIX is the indicator that shows the level of fear in the market, right? Whether investors are fearful or they are very optimistic. If you see VIX around, say 60, 70, that means investors are very fearful in the market. And so what do you expect? You see a rally from the stock market into safe haven assets, right? Safe haven asset like, gold, Swiss or yen asset class, right? But the best is good. Gold is like number one safe haven asset. So all of this, why this was happening in February, we saw all of that happen, right? Gold was flying to the upside. That was when any sell you take on gold, you are sure of a loss, right? That was this period when VIX was all-time high. But now VIX is currently selling below 18.40 level, which signifies strongly that investors now are back. They are being optimistic about the market. They want to put their money into risk assets. So volume is now coming back. If that is clear, meaning we should see this guy rally to the upside. And that's what we've been experiencing since last week, right? That's what we've been experiencing since last week. So let's look at other pair and then we wrap it up for the day. So on US 100, we also have the same thing across board. On US 100, on the daily time frame, US 100 is strong. Beautiful, beautiful. This is really beautiful. With the break of structure we are looking for on US 30, let me put it on US 30. On US 30, we've not seen this break of structure yet, right? We've not seen this break of structure yet for this zone. Let me remove this. So we are waiting for this to happen on US 30 for us to take the buy to the upside. However, on US 100, that's why I like analyzing them side by side, because that will give you a clear picture and you can take advantage of it. All right. On US 100, look at something. While we have structure being very, very bearish, now we can see the recent swing.
Me, bro, I can't hear you.
Hello, can you hear me now? Please let me know in the chat box if you can hear me so we can fire on. Okay, you can hear me now, right? I can see a yes from Kolade. All right, beautiful. Thank you so much. Sorry for that interruption. All right, so 50% of this inefficiency will be a very good place to start looking for a buy in this market, right? Because, the breaker block that will have taken this buy from, at least this fair value gap buy from, that's been tested before. This is it. And this thing always works. Might not give you 1:7, 1:8, and all of those, big, what's it called? Big risk to reward in the market. But you see, your 1:2, you always get it. Look at this. A breaker block that was violated, let's always come back to test it. On the trend line, look at it, and then at least you get at least 1:2, 1:3. That is certain. I know, very sure. I'm so very sure about that one because of I've seen this over and over again happen in the market. Right? 1:3 guaranteed, you will see it. Or 1:2. Let me even use 1:2. 1:2 guaranteed. Stretching your luck will be 1:3. For this one, we still store 1:3, right? It works so well. Every now and then, a breaker block being violated on higher time frame, you will only see a retest, and you can take advantage of that retest, and then still make something off the market. But that already has happened. There's no need banking on that. What we want to do now is to wait for price to come to 50% of this inefficiency. So let me use my Gann box to measure this. Right? So okay, so something like this, 50% of this, we expect that price will come to this zone and then start buying from this zone. That is one possibility. Another possibility is that price can come all the way down into this level, right? This one I've already marked before. Price come all the way down here and then just retest and continue, right? Retest and continuation. Sorry. Right? Retest and continuation. That's another possibility in this market because, I mean, you can't control where it will start reacting from. We're just marking possible levels because now everything is really, really pointing to the upside. So, but then where I'm more confident to start buying this market from is from this place here. And one reason is because of the, 50% inefficiency that price might test. And also just below it is an order block. So if for any reason price want to a week into an order block before it start moving, it still covers it, right? Meaning my entry will be here, my SL will just be below here, and then overall take profit to be this zone, right? Giving at least 1:2. This kind of trade we can get at minimum 1:4, can get up to 1:8 and the rest like that in this kind of trade because price will always move with that bullish momentum to the upside. All right, on the 1 hour time frame, is there anything significant? Nope, nothing really significant. Nothing really significant. This would have been a very good breaker block, but then price actually just jumped. So there's nothing, this other block has not been validated in a way. We didn't see any candle validate it. It's just a jump that the market gave. That's There's nothing we could have done either ways to it. So for this, we'll just wait patiently today while waiting for a retracement into these levels, and we start looking for buys to the upside, right? That will be the best bet, right? Especially on US 100 and US 30. For US 30, we have two areas of interest. The first one above the fair value gap that has not been tested before, or was just tested a bit. For those that understand what I'm trying to say, this fair value gap, right? Even on 1 hour, interesting. So you have this area of interest, and the second one is the inefficiency. So for any reason price want to even react from the first zone, you can take advantage. For me, what I do in this kind of scenario is I share my risk into two, right? So if I'm going to say risk $500 or $1,000, just split it into two so that at each level you can take one position, one entry, best shot, and then of course your SL will be generous with it so that I can accommodate any price fluctuation. right? If your SL is being hit, you know that it's not because the SL is not generous enough. No, it's just price, reversing and doing its thing. All right, that being said, let's move to S&P 500 before we call it a day. S&P 500 almost have the same analysis or the same price action with NAS 100, right? In that, that's also, okay, I'm seeing something very clear now. Something really, really clear now. With this that I've seen so far, I'm seeing XAU USD. I'm sure you're new here, right? So, but no problem. We'll look at XAU USD, but not now. Every day we have pairs that we analyze. Mondays for dollar and yen and gold, right? Tuesday, US market and equity market and commodity pair. The same thing on Wednesday and Thursday. Also, you see me again, your face and my colleague, right? For commodity market. And on Friday, US market. On Friday, gold, yen, and DXY and all of those things. On the daily time frame, let's go back to our S&P 500. On the daily time frame on S&P 500, this is a breaker block on the daily time frame. Be rest assured, price is going to find its way here, right? I've seen this happen over and over again. So there's one possibility. Price is going to find its way here and then reject off this. I'm looking at something like this. The only concern now I have is this inefficiency. This inefficiency, that's the only concern, right? So if there was no inefficiency, I can tell you for a fact that we would see price bounce off this zone to this breaker block and then start pushing to the upside again. But because of this inefficiency, we might most likely see something like this, price coming back to fill inefficiency in the market and then before we see a continuation. So it's a two-way street now, right? Meaning we can see a retracement into this level and then price starts to buy, right? Starts to buy, give you 1 is to 2, 1 is to 3, 1 is to 4, and suddenly reverse and start coming to this zone. So you are not carried away, right? I'll look for a buy. Once price gets to this zone, number one, I'll look for a buy because I know there will be a rejection. See, the minimum at least 1 is to 2. We see it from this zone, right? I'll look for that and then probably take advantage of it. While I have in mind that there's a possibility of price to keep going down to go and fill this deficiency, maybe on 4-hour time frame. There's that possibility of price going down to fill the inefficiency. Interesting. By the time I adjust this 4-hour time frame, that's happened already. So guys, don't worry. On the 4-hour time frame, it has happened. Meaning, by the time you adjust this, you see that rejection I'm talking about, right? Price came back again. This is the first candle, second candle, third candle. Price came back, tested it, and started moving to the upside. So by the time you see price coming back, just wait patiently for it to come to this inefficiency. I didn't even check the 4-hour time frame before I started seeing it on the daily time frame. This thing works. You see breaker block on US 30, NAS 100, and S&P 500. It works very, very well. Breaker block and other blocks, and also fair value gap. It works, right? So for this, so now we'll just leave it. Once price come back to this level, we don't take any trade. We wait for it to fill this inefficiency, at least 50% of this inefficiency, and then we can now start pulling the trigger to buy this market, right? So that's what I'm looking at for today. I'm not looking at for sales, no. I'm expecting a sell-off, right? Because price can't jump from here to this zone. It's going to sell, but then I'm not really banking on the sell. I'm more of the buy because I want to be in the direction of fundamental, direction of sentiment in the market. All right, that being said, let's look at quickly on gold. Somebody has been disturbing us for gold since morning. Good. I'm not, here for gold today, but then we just have to do it. What I'm seeing here is, fundamentally speaking, I think I'm not even thinking what fundamental is saying now. Gold will most likely still sell off, right? A bit. Gold will still sell off a bit, at least in the next 90 days, because the tariff compromise that happened, and that was yesterday, right? is for 90 days. They said they're going to ease the tariff on themselves for the next 90 days, right? So we expect to see some, calmness for the next 90 days. And if that is true, meaning people are going to do business in the next 90 days, right? And they expect chaos to happen probably during like 90 days now, 3 months will be probably in say July or August, about, right? Before we see anything chaotic again, at least from what the news, as the current news we have. So if that is true, then we will see that gold will sell off, right? If there's nothing chaotic in the market, gold will have to reprice, right? All of those bullish movement has done before, we'll see that sell off. From structure, look at what structure is doing. For those that understand market structure, you understand this is what? Double top. By the time you see double top on the daily time frame, what do you expect? For those that understand 001 candlestick pattern, double top on daily time frame, what do you expect? I'm asking us in the chat box. So what do we expect? Especially the person that asked this question. Sell off. Exactly. Right? So this is just basic price action on the daily time frame. Let's not even look at any other thing. You're seeing this clearly on daily time frame. And what happens next? By the time it breaks this zone, right? We just want to see that it breaks this zone. Want to see that it breaks this zone, because by the time it breaks this zone, to be a proper double top, and then what do you expect? It's going to match this leg. You see a sell off to this zone. We know clearly that is pattern, right? Price action pattern. Once it breaks this zone, that is very clear, obvious. Expect a retest and then measure the leg, this leg here, this first leg we have here. You measure the exact thing and then try to give you the exact thing. Expect a sell-off. So with that being said, I believe our analysis is very, very clear. There's nothing, we are just waiting for a break, right? We're waiting for a break of this zone, and then price gives us that break, we expect a sell-off in the market. And also, one of the things that will make this analysis to be invalid is if we see another chaos again happen all of a sudden, probably not Chinese and US tariff again, probably something entirely different. That can now make us to see that bullish run again. Probably other nations started fighting, Taiwan and China, they started fighting, or Israel and Hamas started a new, fresh, military exchange. That will send gold rallying. But from what we have now, what the fundamental, gold is set to start selling off, right? And we've been saying this since last 2 weeks thereabouts, but then we emphasized on it on last week market follow very, very clearly that we're going to see a sell, especially my section, right? All right, that being said, thank you so much for joining this morning. I believe it was helpful. I believe we found this session very, very, very helpful. If you have any question, let's ask in the chat box. Let's drop a comment in the chat box if you have any question. Also be reminded, we'll be meeting again by 2:30, 2:30 and 2 p.m. in the afternoon for our New York market follow session. What we do there is just to see if anything has changed significantly from what we have in the morning. Our area of interest, our levels that we've marked out, what we're expecting from this level. If something really significant has happened to them, we can adjust or even enter a trade at this level. All right, thank you so much. I see there's no question. There are no question. Lewis, very helpful. Thank you. Thank you to Lewis. PGG3, thank you for gold, boss. Thank you to Chief. You're welcome. You're welcome. So we meet again. Until next time, ensure you use proper risk management. If it's not obvious, it is dubious. If your setup is not as clear as you can see me, don't enter your market. Not entering a position is also a position in the market, right? Cash is also a position. If, in case you don't know, let me let you know now. Cash is also a position. So ensure you give yourself the best shot and you take care of yourself. So let me just do this. Edwin, thank you. Emmanuel, James Friday, Ibukun Salako, James, Joseph Victor, Kolade, Lewis, Stanley, PGG3, and user. Thank you so much. We meet again by 2 for our London session market color Until next time, cheers and God bless.